Okay, we're going to look at the last section, 6.5, which is your Form 1040 and Schedules A and B. We're not going to physically fill out these forms or the schedules, but we are going to talk about the key parts of them. So for a Form 1040, you have three forms. You have 1040, you have 1040A, you have 1040EZ. We already discussed 1040A and EZ. These are a lot shorter. The 1040 is your long form. This is if you don't meet the eligibility rules for your other forms. Schedule A, this is an attachment that goes with your taxes. This lists your itemized deductions. Anything that you can deduct from your taxes will be listed here with the price that kind of comes off. Schedule B, this lists your interest or dividend income. This is if you have taxes or accounts that gain interest over the year, you would put that in your Schedule B. Tax credits, these are things that reduce your taxes dollar for dollar. Some examples would be a child care credit or your earned income credit or your EIC. These are some things that you can directly subtract right off your taxes. Tax avoidance. It's not breaking the law, it's just you're lowering your taxes. So you're finding things in your tax situation where you can lower the tax you owe to the government, and it obviously reduces the cost that you have to pay to the government. And then tax evasion, this is if you lie on your tax return. You could be audited by the IRS, and that tax evasion is a felony. So if you need to pause the video, pause it right now, please, for any definition time that you need. All right, number one says, Chara had $5,700 in medical expenses last year. Her medical insurance covered 80% of these expenses. The IRS allows medical and dental expenses deductions for the amount that exceeds 7.5% of the taxpayer's adjusted gross income. If Chara's adjusted gross income is $35,432, how much can she claim as a medical deduction, and explain? Okay, so she paid $5,700, and she would be responsible for 20% of that. It said in the problem her medical insurance covered 80% of these. Okay, so she had $5,700 in medical expenses. She only had to pay 20% of them. So times 0.20. So she only paid the portion $1,140. Okay, now the IRS says that you can deduct up to 7.5% of her adjusted gross income. Her adjusted gross income is right here of $35,432, and we are going to multiply that by 7.5%, or 0.075. So when we do that, we will get $26,057. Okay. So it says, how much can she claim as a medical deduction? Explain. Okay. She can only claim the amount if it exceeds this. Okay. So if her cost was more than $2,657, she could claim anything over that. But since she only paid $1,140, that's less than the $2,657, so $1,140 is less than $2,657. So since it's less, she can claim $0. Number two, Jonathan is a single taxpayer. We are going to use the table off to the side here on the right on page 382. That's Schedule X if you are filing as a single. Right here up at the top, it shows you if you are filing as a single. So we're going to use that chart. It says his total income before deductions was $63,110. He was able to reduce his total income by $10,312 when he filled out a Schedule A. How much did he save in tax by using Schedule A? Okay, so let's first figure out, where does $63,110 fall? Well, $63,110 falls between $37,450 and $90,750. So we are going to use this formula over here to find out what our tax is going to be. So we are going to pay a minimum of $5,000 156.25 plus 25%, so plus 0.25 of anything over 37,450. So 63,110 minus 37,450. So again, enter it in the calculator just as you see it. 5,156.25 plus 0.25 parentheses 63,110 minus 37,450 close parentheses. That gives you a tax of 11,571.25. Okay, that's without any sort of deductions that he claimed in the problem. Now, if we were to deduct off the 10,312, so now you're going to do 63,110 minus the 10,312, and we're going to compute using that new value. So 63,110 minus 10,312 gives you a new income of 52,798. All right. Now let's find the tax using that income. So again, 52,798 falls in that same bracket in your textbook off to the side. Falls in that same range. Okay. So we are going to do again 5,156.25 plus 25% of the amount over 37,450. Well, our new amount, we're going to use this number right here because we're deducting some income. So 52,798 minus 37,450. So again, let's enter it in the calculator. 5156.25 plus 0.25 parentheses 52,798 minus 37,450 close parentheses gives you a tax of 8,993.25. So by filling his Schedule A out, he deducted, or he lowered his tax considerable. So if you look here, our original tax was, scroll back, our original tax was right here at 11,571.25. Our new tax is going to be 8,993.25. So when you subtract those two, okay, when you subtract those two, so 11,571.25 minus 8,993.25, let's subtract them. You get a total savings of $2,578 worth of saving. So you're again just figuring out two different taxes, how much you're going to save. All right, for number 3, it says Mr. and Mrs. Delta are filing a joint tax return. Together they had an income of $100,830 last year. Their total deductions were $16,848. What was Mr. and Mrs. Delta's taxable income? So for this one, you want to take their income of $100,830 and subtract off all the deductions, because you're not taxed on the deductions. The more deductions you have, the better. That lowers your overall tax burden. So 100,000 minus 830, or I'm sorry, 100,830 minus 16,848 gives you a taxable income of 83,982. Now it says, what was the tax on the amount in Part A? Well, this is where we need our tax table. So if you come off to the side here, on our Canvas page, under the day for Memorial Day, which was Monday, you see 2020 tax schedules. These are your formulas that we're going to use. You can also pick the exact value up here in the tax table, but you got to do a lot of scrolling and find the $83,000 table. It could take a little bit of time. But if you click on the second one, the 2020 tax schedules, it'll download the formulas for you, and it'll look something like this. These are your 2020 tax rate schedules. You will notice on these tax rate schedules you have single at the top. The second one is married filing jointly. Then you have head of household, and then you have married filing separately, which we are not really focusing on. The only one we care about is married filing jointly because the problem says Mr. and Mrs. Delta are filing a joint return. So you're going to find that $83,000 falls in between, married filing jointly falls in between right here at $80,250 and $171,050. Okay, it's the third row in your second chart there, married filing jointly. Okay, so that formula is 9,235. So 9,235 plus 22% of everything over 80,250. So it's plus 0.22. And everything over 80,250. Well, our total income was 83,982 minus 80,250. Okay, and again, that formula came right from the text, or I'm sorry, right from the tax table, which is on the right side of your screen. Basically, right here on the right side. Okay, when you multiply that out on the calculator, you're going to get a total tax of $10,056.04. Okay, Part C says the Deltas received a combined education credit and tax credit of $2,500. How much tax must they pay after applying this tax credit? Well, you take the tax from Part B, $10,056.04, and remember a tax credit comes right off your tax. So minus $2,500 gives you a total tax now of $75,56.04. And then Part D says if their employers withheld $10,201 in federal income tax, how much money will they owe to the federal government? Well, actually, all right, if they withheld $10,201 from their paychecks, but they only owe $75,56, they're not going to have to pay anything. They're actually going to get a refund for the difference. So if you subtract these two, they're actually going to get a refund of $2,644.96. Okay, they had more taken out of their check. They had $10,201 taken out of their check, but they only owe the government $75,56.04, so they're going to get a refund because they overpaid on their taxes. And again, these tax tables are really handy, so if you want to download to your Chromebook, I would highly suggest that. You can use the formula sheet, which is off to the right here, or you can use the exact tax table, which is that first link on the calendar. And we are not going to do problem number 4 because it's asking us to fill out forms, and we're not doing the forms here in class. So you can delete question number 4.